Geoffrey Dennis is now joining us, Independent Emerging Markets Commentator. Geoffrey, good to have you with us here. Thanks very much for your time. Our markets like India, by the way, there is, of course, elections here as well over the next couple of months. But is the trajectory looking good? Disinflation in the US means the dollar going down. And dollar down, I think, has meant the same thing for the last couple of decades, which is, positive flows into emerging markets. Just wanted your thoughts on EMs and India specifically, Geoffrey.
I completely agree. We like to see the dollar going down as far as emerging markets are concerned, and I think that will happen later in the year, and that's why I'm still fairly constructive about EM. EM is up a couple of percent this year, 2.2% as of last night. As of this morning, and I expect EM to be up about 10% this year. So I don't think it's going to be a huge year, but it's going to be a decent year. Now, the issue here, of course, is, as you will have alluded to, is that there's some doubt about now the pace of U.S. rate cuts and how many you'll get over the rest of the year. And obviously, Powell pretty much said the same thing yesterday by arguing that they need more evidence before interest rates can come down. So what you're doing here is you're seeing this rate cut scenario pushed out further. I think you get 2 rate cuts only in 2024, and it's going to be complicated, I think, by the timing of the U.S. election. The Fed doesn't want to cut the first time just ahead of the election. So I think we get the first cut in July. But the point is here that I think the narrative is still intact, and that narrative is lower U.S. rates, lower U.S. yields, lower dollar, eventually markets doing better, and or at least global equity markets doing better, and EM doing better as well. And so I think the outlook is good. It's just getting pushed back a little into the future. I like India within the scenario. There is some talk now around that people are switching out of India and going back to China. I think that's very premature. I think India will be a big beneficiary of this narrative as it kicks in later in the year. And you've already just mentioned oil prices. That's a big concern for India, so we have to keep an eye on those.
That's interesting. You talk about the narrative where a switch from India into China is being talked about. But Jeff, hi, morning. Thanks for joining in. We have a big event upon us, which is the elections, right, in the middle of May. Mm-hmm. I want to understand from your end, from the number of years that you've watched the market, do elections have any major impact? Because the expectation is this time the ruling party will come back into power for the 3rd term. Do you think that will instill a little more confidence in the Indian markets?
I think it'll instill more confidence in the Indian market, but I don't think it'll be a huge positive, on election day or when the results start to come out, I guess, which is going to be in May, or I shouldn't say election day, of course, I should say election days, because I think everybody pretty much knows what the outcome will be. I think the only way in which the Indian market will be significantly impacted by the election will be if there was some negative surprise and BJP didn't do quite as well as anticipated. So I think BJP does very well. I think there doesn't seem to be much doubt about the election result. Modi will remain as Prime Minister. So I think it's supportive of the overall story, but I don't think the Indian market gets a big boost from this. I think India is just still a place to be because of the growth story. Obviously, you pay high multiples for most of the stock market. But I think in this world where there's still enormous uncertainty about China, which continues to be a drag on the EM index, I think if you get an expected election result in India, you get evidence eventually that inflation comes down a bit more in India, and you start to see the possibility of rate cuts down the road, and this narrative in the US, which has been delayed, it's not ending the narrative, which is lower rates, as I say, and eventually a lower dollar. All of that is very good for India over the rest of the year. So I fully expect to see India outperforming. I think the election will support that, but I don't expect the election itself to be a big event for the market because I think the result is discounted.
All right. Hi, Geoffrey. Morning, and good to hear your comments in. So India continues to remain the top preferred market, but maybe part of the good news with regard to the election outcome is in the price. What about the US market, Geoffrey? I mean, in the last 1 year or so, you're talking about the mother market that's up 25% plus. How do you see those markets pan out, and the preference between developed market versus an emerging market like India?
I think over the course of the rest of the year, as this narrative kicks in, as I say, of lower interest rates, a lower dollar, I think emerging markets will close the gap with the developed markets. Developed markets, as of this morning, are up about 8% year to date. And so there is a gap there. It's not a huge gap. But I continuously point this out, that if you strip out China from the EM index and strip out US from the DM index, you're getting very similar performances. And I think that eventually, once the narrative, once you do get those lower rates in the US, you do get some pulling back again of bond yields, and the lower dollar is crucial. As you said right at the top of my interview, the lower dollar is crucial. I think emerging markets will start to see some significant inflows, which will push the asset class higher over the rest of the year. Now, I think the U.S. market is fine. Of course, it's got very, it's very much the flavor of the month, if you like. And of course, the so-called Magnificent Seven are dominating here. But I don't see in this environment, short of there being suddenly either a reacceleration of inflation, in which case watch out for the oil price on that front, or in the event there's a sudden deterioration of the economy and we go into recession. I don't see, except in those two events, the U.S. market doing anything else other than just rising still. I'm sure erratically, but if this narrative, as I say, plays out over the rest of the year, and for that we need those Fed rate cuts to begin, I think some of that money will switch out of the U.S. into EM. I think both asset classes will do well, but I think EM will eventually come to outperform the U.S. this year, and India will be an overweight as far as I'm concerned.
All right, EMs will outperform the US this year and India will be an overweight. That's what our viewers want to hear, is it not? Thanks a lot, Jeff, for joining in and giving us your view.